InvestorIdeas.com podcast.
Good afternoon and welcome to another episode of InvestorIdeas.com podcast. In today's podcast, going to be looking at a few public company announcements from Izracan Biosciences Incorporated, trading on the CSE as IPOT and the OTC as ISCNF. Also looking at HEXO Corporation, trading on the TSX as HEXO and the New York Stock Exchange as HEXO. As well, looking at Sundial Growers Incorporated, trading on the NASDAQ as SNDL. As well as Fire and Flower Holdings Corporation, trading on the TSX as FAF and the OTCQX as FFLWF. So first today, starting with Izracan Biosciences, who announced that the flagship Heifer Valley-based Ein Haharash farm is in full readiness to commence growing and production activities. Now, with the phase of 54,000 square feet of greenhouse canopy fully constructed and extensive processing capabilities in place, Izracan is moving rapidly towards the commencement of industrial-scale operations aimed at servicing both domestic and European markets in 2021. The Ein Haharash farm operations and construction teams recently expanded the on-site post-harvesting facility in preparation to meet increased demand from regional partners, representing both domestic and export market sales opportunities. So currently, Izracan and its local consultants have scheduled the commencement of planting for early March to coincide with the start of the optimal climate conditions, subject to the timely receipt of the final government approvals. Now, Izracan COO Matt Chatterton commented, "We're pleased to report that we have concluded every step as outlined by our regional consultants who have brought proven and invaluable experience in working with the Israeli government. Additionally, it should be noted that the various representatives of the ministries involved have been professional, open, and forthright in their dealings with us at all times. Everyone has been working within the context of the global pandemic, and we are grateful to all concerned to have achieved so much during what has been extremely trying times. We look forward to reporting on the conclusion of the upcoming inspections and confidently anticipate an exciting period of activity ahead as we continue to build, grow, and create value in Israel." So, obviously, I talked a lot about Izracan Biosciences maybe about a year and a half ago, over the last little bit, and a lot of anticipation around their facilities and their sort of production capabilities in Israel. Obviously slowed down pretty significantly by sort of COVID lockdowns and procedures. Now very close to having their operations fully ready to go, and again having that planting. So this year's sort of first harvest will be something to pay attention to, and also what kind of yields they can get and what kind of markets they can enter into. Obviously, that's all dependent on them getting their final approval, which seems very likely at this point. But that being said, when you're looking at sort of the Israeli cannabis market, checking out Izracan over the next year will be fairly important. And again, especially if you're paying attention to what's going on in the EU marketplaces and sort of the different competitive battles playing out there for sort of market share of some of those different EU marketplaces. Israel and Izracan specifically potentially can be a pretty big player within that space, but again, that is dependent on them getting approvals fast enough and getting products to market at a timely fashion, which will be, again, sort of the expectation over this year, depending on what other sort of unforeseen slowdowns could happen to them. Next, looking at HEXO Corporation, as well as XENABIS Global Incorporated, trading on the TSX as XENA, who announced that they've entered into a definitive agreement under which HEXO will acquire, by way of the court-approved plan of arrangement under the Business Corporations Act of BC, all of XENABIS issued and outstanding common shares in an all-share transaction valued at approximately $235 million. Now, the transaction was unanimously approved by the board of directors of each of HEXO and XENABIS, and XENABIS board of directors unanimously recommends that all the shareholders vote in favor of the transaction. Now, some of the highlights for HEXO in this situation. So based on HEXO and XENABIS' most recent interim quarterly financial statements, the combined organization would be a top 3 licensed producer in terms of combined Canadian recreational cannabis sales. The transaction does give HEXO immediate access to the European medical cannabis market through the XENABIS local partner with an established facility in the EU, as well as HEXO estimates that the combined entity may realize annual synergies of approximately $20 million within 1 year of the close, and the proposed transaction would give HEXO the access to a licensed capacity to produce approximately 1,100,200 kilograms of additional high-quality cannabis annually. We are thrilled to welcome the XENABIS team into the HEXO family. XENABIS has built solid relationships, and they share HEXO's vision of bringing exceptional branded cannabis experiences to adults everywhere in Canada and abroad, said Sebastian St. Louis, CEO and co-founder of HEXO Corporation. Now, we are proceeding with this transaction because we believe it should be accretive to our shareholders, and it also positions HEXO for accelerated domestic and international growth while supporting near-term requirements for additional license capacity. Now, HEXO's growth strategy includes expanding our global presence, and this acquisition is an important step in that direction. So obviously I've talked about HEXO a couple times recently, expanding their U.S. operations as well. Now through partnering with XENABIS, we'll have a bigger focus on the EU as well. So they're definitely looking much more aggressively at the international markets, and you're starting to see that most of the larger scale producers, whether it's in Canada or other parts of the world, are really starting to pay much more attention to the international market and anticipation of a more globalized cannabis industry, which is sort of yet to come over the next couple of years. So you're starting to see most of these strategies for sort of long-term expansion start to play out. Continuing in a similar line of thought, Sundial Growers, as well as Indiva Limited, trading on the TSX Venture as NDVA and the OTCQX as NDVAF, announced a $22 million strategic investment into Indiva by Sundial. Now, the investment will be completed in the form of a brokered private placement led by ATB Capital Markets of 25 million common shares of Indiva at a price of 44 cents per common share. Sundial is pleased to support the development of Indiva's high-quality products, said Zach George, Chief Executive Officer of Sundial, and this transaction broadens our exposure to the rapidly expanding cannabis edibles category. Now, Indiva intends to use the net proceeds of the placement and term loan to retire its outstanding debt in full, which includes its demand loan and promissory note, as well as for working capital and other general corporate purposes. We're delighted to welcome Sundial as a strategic investor in Indiva, said Neil Marotta, President and Chief Executive Officer of Indiva. The capital from this $22 million investment significantly improves Indiva's balance sheet, expands our working capital, and provides the resources necessary to support strong growth in our business. Indiva will now have the ability to make additional capital investments, primarily into automation, which will drive higher throughput and profitability while ensuring our product quality maintains the best-in-class standard our customers and our clients depend upon. Indiva's bolstered financial strength will also ensure that we can defend our market share position as a top edibles producer in Canada and continue to bring new and innovative cannabis products of age Canadians. So, obviously, again, Sundial focusing specifically on making sure that they have a strong edibles footprint through Indiva moving into the future. And for Indiva, obviously, $22 million will help them out a lot in the near term, especially when it looks at sort of expanding their production capabilities through automation. Again, there's lots of competition that you're starting to see build out in the Canadian edibles market and even the global edibles market. There's a few other companies, again, really focused on building out sort of premium facilities for producing not only high quality edibles, but at a high capacity rate. And I do think that as more and more you're starting to see, whether you're looking at the US or Canada, edibles and beverages are continuing to grow in market share and overall sales volume at most dispensaries, and especially in more evolved markets. So again, in Canada, you're starting to see this play out. In California and Nevada and Colorado, you've seen it play out quite well, where again, the beverages and edibles continue to gain more and more of that sales percentage. Obviously, dried flower isn't really dropping too aggressively. Pre-rolls still seem to be pretty aggressive, and you're starting to see a little bit more of a movement for the live resin and solventless extracts. That being said, for a lot of people, going the edibles route and the beverage route is going to be sort of the mainstay for a lot of consumers. And I do think that as well as there's more and more products hitting shelves, consumers are getting a little bit more comfortable in what they're looking for when ordering edibles or beverages, and also are getting a little bit more preferential as far as what sort of quality factors are they looking for. Again, vegan, gluten-free, calorie-free, sugar-free, etc. What sort of formats they're looking for. So right now you're seeing gummies is still in pretty high demand. Chocolates not as aggressively. And then again for beverages, which style and sort of format of your beverage you're putting out there. So I do think for Indiva, it's going to be a pretty competitive market for them to continue to go against a lot of these other edible companies, but they do have a pretty good footholding now, and if they can get again sort of their production up to capacity, they should be doing pretty well in that marketplace. Lastly today, looking at Fire & Flower, who announced that it has submitted its initial application to list its common shares on the NASDAQ. The anticipated NASDAQ listing is part of Fire & Flower's growth strategy, which is focused on expanding its brand and markets outside of Canada. Now, the company anticipates that the NASDAQ listing will assist in attracting retail and institutional investors interested in Fire and Flower's international growth ambitions, as well as provide the company with increased access to strategic partners, deal flow, and value creation opportunities. Now, Trevor Fencott, Chief Executive Officer of Fire and Flower, commented, "We are firmly committed to building Fire and Flower into one of the leading cannabis retailers in the world. Our ability to deliver a superior cannabis product and customer experience, along with our cutting-edge technology, has driven our success in Canada and strongly positions our company to continued expansion in new high-growth markets." Now, Fencott continued, "Our focus on building a leadership position within the cannabis industry goes hand in hand with driving increased value for our shareholders. And this application to list on NASDAQ is a major step forward in expanding our shareholder base in the U.S. We will continue to pursue domestic and international opportunities for accelerated growth in the years ahead and look forward to updating our broadening shareholder base as we move ahead." So, Fire and Flower, talked with them a couple times in the past, and they're definitely a company that's always had sort of the international retail brand on their mind. I think now, again, though, as you're seeing a lot of speculation and sort of expectations around legal reform change in the U.S. over the next 2 to 3 years, you're starting to see, again, Fire and Flower not acting any different than most of these Canadian-based or international-focused companies, where they're starting to look at how to get U.S. footing and shareholders, so that way they can expand into the U.S. once those markets open up, or when and if. I do think for Fire and Flower, as far as a retail setup, they've done really well in Canada, focused very heavily on a lot of sort of next generation attributes right out of the gate, focusing on delivery, focusing on online, focusing on a perks and rewards system very quickly, even before there was any sort of COVID measures that kind of forced some companies to innovate in that same fashion. And I think, again, over the sort of COVID lockdowns and difficulties that have even been stressed on some Canadian retailers over the last year, Fire and Flower has done pretty well in adapting to that environment and expanding their footprint over the course of that year. So I do think for them as a global retail brand, there's a lot of very enticing sort of properties about Fire and Flower that make them pretty valuable when looking at an international brand. But like anything, it's always going to be difficult as far as the execution, and it'll be interesting to see how that does translate, and if that can translate, where you can have a retail brand that goes global or at least international in some sense. I think, like I said, they definitely have one of the better footings for a brand to be capable of doing that. But I do think that it's going to be quite difficult to bust into the U.S. market and even into, for instance, the UK or EU markets as well, just because of your changes in regulations and sort of how you would have to change the entire infrastructure of your retail store. That's all for today's podcast. Enjoy the rest of your Tuesday. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated's CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.